Hello and welcome to BQ Prime. A very good morning to all the viewers. Joining us on the show today is Ashish Maheshwari, Director at Blue Ocean Strategic Advisors, to discuss what's in store from here on with regards to the movers and shakers. Welcome to the show, Ashish, and happy to speak to you.
Thank you.
Ashish, before we start, clearly you are seeing good momentum in today's day of trade and a good contribution coming in from the likes of a Reliance Industries. You have Nifty, which is trading above the 18,350 mark. And clearly, from a technical perspective, also, if you see, the May series was on a positive note. The key is if the buying cues continue, overall from the last two series, and the index enters a new price territory. So it's going to be an interesting month as well with regards to where June goes. But let's start with the Reliance Industries. Clearly, if you see in terms of where RIL goes, on the back of Reliance Consumer Products completing the acquisition of Lotus, the 51% stake for 74 crores, you are seeing some great momentum in today's session. What would your advice be?
See, as far as Reliance is concerned, we are seeing from 2200 level onwards, the stock is continuously showing a lot of strength. And this is a stock where all leading foreign brokerages have given a buy with target ranging from 2800 to 3200 plus. So there's no reason why the market is going up and Reliance should remain subdued. As far as their businesses are concerned, all are firing as far as a lot of cash is concerned, whether it's Reliance Retail or Geo or O2C business, all are doing well. And this we saw in the last quarterly numbers also that they are in a striking range of touching 20,000 crore profit
Mm.
now in this quarter. Last quarter they did 19,300. We may expect 20,000 crore plus profit. So this is a stock which has been laggard and not taken part in rally of 50 stocks. But as now FIs are continuously buying large cap stocks, so you may see some more run up in Reliance Industries. I am bullish even at this price in Reliance Industries.
Right. So bullish call coming in on that one. Moving on, you have a ONGC that is in focus. In fact, one of the top losers from Nifty 50, and this is ahead of numbers. And apart from that, you have Jeffries, which has gone ahead and reduced their investment in ONGC as well. What would you recommend?
See, this is again a proxy play to what's happening in the crude. And as
Mm.
we know that crude is not going anywhere, so in fact this stock is also not going anywhere. From a striking distance of 50 to week high, we have seen this stock is languishing between 160 to 166 7 level for quite some time. And even this quarterly numbers are going to come today, but I'm not expecting any big move in as far as ONGC is concerned because against the last quarter numbers of 10,682, I'm expecting 10,900 to 11,000 crore profit. So no major, change in profitability as far as ONGC is concerned. And this the reason stock is showing some nervousness. So I will not advise ONGC to buy at this point.
Right. That's with ONGC. Moving on, a Zee Entertainment posted numbers. And clearly, the stock overall, if you see, opened nearly lower in yesterday's session. There is a recovery. Today, there is some bit of positivity on that one. However, many brokerages have gone ahead and slashed their earnings growth target after the loss that has been posted. Apart from that, you have the NCLAT, which will be hearing Zee Entertainment's hearing as well with regards to the merger with Sony Goes. What is your view on this stock?
I think the results were really disappointing. 196 crore loss against 182 crore PAT previous year is something uncalled for. But there are so many reasons why this lackluster performance is there from Z. First of all companies are trying to reduce their advertising budget to maintain their profitability. So mostly FMCG companies are not giving those advertisements. Second, again, there's a IPL time, so a lot of things are again going on. These promotions are going to that particular site. Third is again this NCLT overhang is always there in the stock. This is the reason a stock is touching near 50 to be low. And until unless, in my view, this merger with Sony goes well, and this happens in near future, a stock will not see 200 rupees mark in a jiffy. So my suggestion will be to avoid Zee Entertainment even at this point.
So that's a avoid coming in there. Aster DM reported numbers, and apart from that, they've also received interest and indicative term and potential buyers for their GCC region business. Now, clearly, they have said that the binding bid is likely to be received by the end of the first quarter. And GCC comprises almost 75% of their business revenues. How are you looking at Aster DM, and what would you advise an investor to do?
It's like negative as far as their plan to GCC businesses sale of is concerned. Because if you see, they are present in almost 7 countries, and most
Mm,
of the business is coming from GCC side. So they are having around 30 hospital, 500 strong chain in GCC. If you go to Dubai, you'll find so many stores of Esther in every nook and corner of that particular city. So if those kind of businesses will go away from the books, and it will be mostly India-centric business, where there's a lot of competition as far as Esther is concerned. So numbers were good for this quarter, and the stock is already near 52-week high. But in my view, it will remain under some pressure in coming time. So it's a avoid for time being from my side.
right. Moving on, Zomato has gained in trade overall, and clearly that's been an addition in terms of Chris Wood's portfolio as well. What's your view on a Zomato, and from a valuation perspective, is it a good bet?
There's one good thing which has happened is they have become on a standalone basis EBITDA positive. They are earning
Mm,
now 5% EBITDA, which is positive. As far as Blinkit is concerned, they are just losing money there, but it take at least 1 year time. So Blinkit will also come in positive territory because left and right they are cutting cost even at Blinkit side also. So in my view, Zomato is a stock which can be bought at 63, 64 levels. I don't think so. Even the pressure related to ONDC or the hype of ONDC will hit their margins of business in a short term. So, in my view, at least in my by the time ONDC will pick up, they will further scale up. So, Zomato is a buy from my side at any correction. 63, 64 is a good level to enter. In fact, all other brokerages are also bullish with a target of 80, 90 coming in Zomato. So, yeah, can be bought in some decline.
right. Moving on, Page Industries is an interesting one. The stock has slumped 15% on the back of a disappointing fourth quarter. The company has clearly bowled the investors because this is a very sudden shift that has happened, right? What's your view? Is it that it's the newbies, the newcomers in the retail space, which are taking away market share from a Page Industries, or there is something structurally really going wrong? How are you looking at it?
In fact, this was a disaster quarter for as far as Page Industries is concerned. If you see September 163, December
Mm,
123, and now only 78 crore profit, and the kind of market cap this company enjoys, and if you should continuously show this kind of declining profitability, who will pay those kind of valuations? So, in my view, there's a stock which even can touch 30, 32,000 also in coming time because the growth momentum is not going to come back soon. Second, they are
mm,
having a lot of old inventory, higher raw material prices, cotton, which was exorbitantly at higher price last year, is stuck with them. So there's a cleanup which is happening now in the books also. At the same time, in e-commerce space, lot is happening as far as innerwear is concerned, where other players are taking lead now compared to Page Industry, which is more into offline model. So, in my view, pressure will continue here, and even this quarter, I'm not very optimistic that they will able to bounce back.
right. Moving on, Prince Pipes is another one which is seeing some smart moves in today's day of trade. If you see in terms of the quarter, it's a pretty stable quarter, no major gyrations coming in there. How are you looking at it, and what would your advice be? Because clearly, if you see the stock is up around 4.5%.
You see, it's a very kind of steady stock. If you see 50-week high lows, 510 and 650, and after this, yesterday is good set of numbers. The stock is at 610 now. Again, if we see the performance of Prince, December profit from 35, they did almost 94 crores, which is huge in March quarter, and this is the reason why the stock is showing a lot of strength. And if we see their even product portfolio, this is one of the company which is one of the largest building material
Mm.
portfolio, 7,500 plus products they have. Besides this, they have entered into industrial piping along with home piping and surface drainage system, etc., which is again a good field to be. So this is a stock. If they can continue same sort of momentum, we'll see even 52-week high breaching in shorter term. So this is a buy from my side at 600 rupees.
Right. A buy coming in on that one. Moving on to Praj Industries, a 50% above up move coming in terms of profitability, a good quarter that has been reported. And if you see on a 1 year basis, though, in terms of the company, we've seen a gains of around 18%, but after hitting a high of little over 450 rupees, it did slump to a low in the month of April to in around 300. And from there, now it started to see its upward journey. Is this a continuation that we will see from here on, taking the numbers at a good level to buy?
Yes, I suggest a good level to buy Project 370 odd level. Again, the reason is first of all, very good set of numbers. If we see FY 22 to 23, 150 was last year. This year they did 239 crore profit, debt-free company available at just 24, 25 price earning multiple to FY 25 earnings. Again, two triggers are there. One is their 2G ethanol plants are very high in demand because everywhere ethanol blending or ethanol production, whether India or overseas, is picking up. And Praj is a future technology ready company. So they are getting a lot of business there. Besides this CBG plant, that is compressed biogas plants, are also
Mm.
getting good demand for Praj. So in my view, this is a stock which should be accumulated. And I like this more compared to any sugar stock direct play. Better to buy ethanol plant manufacturer Praj.
Right. Moving on, a Medplus is seeing some smart moves in today's session, and that's mainly on the back of earnings. The profits have surged twofold, and this is mainly on the back of a strong sales number. If you see in terms of the performance, in terms of the stock price in the last, probably a YTD basis as well, 31, 32% upside is what we've seen. 1 month, it's clearly an underperformer. Sorry, on a yearly basis, it's an underperformer. Again, what's your view?
I think this will be one of after Apollo Pharmacy, there will be second largest
Hmm.
pharma retailing chain with presence in almost 500 cities, 3,500 plus stores they are having. And the way things were not good in last quarter, a lot of people, almost every second person was having some complication related to weather change, cough, cold, fever, whatnot. So companies like Medplus took really good advantage of this, and this kind of numbers where profit went up from 13 to 26 crore for the quarter for a pharma retailer is really good set of numbers in my view. And this momentum will continue because instead of more export market, domestic pharma industry is now very stable and
Hmm.
showing consistency. We have seen even numbers on Aster and others also. Numbers are good. So my suggestion will be to buy MedPlus on some decline, say 750 will be a good level to enter in the stock because 52 week high was almost 950. So can be accumulated at some decline.
Right. So buy on dips is the strategy coming in there. And the last talk, Ashish, I want to discuss with you is with regards to e-clerks. Now, clearly, if you go to see, it's mainly a play in terms of margins that we are seeing in this quarter. Overall, if you go to see sequentially, the growth has been muted. And analysts have clearly indicated that the performance on margins is satisfactory because it's pretty much at the middle of the guided band as compared to the guidance of ending at lower end. Do you think that's one of the reasons why we are seeing a sharp tick in terms of the stock price, number one? And two, from a demand perspective, how are you looking at e-clerks?
See, as far as the numbers are concerned, one thing that that's very impressive is the year over year, their top line has moved up by almost 20%, which I think is a good trigger. Bottom line, anyway, they have shown always a consistent
Mm.
growth there because they're all three segments, which are digital, financial market, and operation management for bigger corporations. They are all very steady kind of businesses where they are not running after billion-dollar ticket deals, size contracts, etc. But they are maintaining relationship and uh, getting a repeat business from most of the clients, and there's a reason they are doing consistent and doing well. So my suggestion will be to look at E-clerks, because the mid-cap IT stocks will continue to outperform our large cap IT stocks because of
Mhm.
niche nature of their business. So E-clerks is a buy in my view at 1450 level. So because stock has went up quite smartly today, so I'll not advise to ride now. Just wait for some dip and then enter.
Right. So buy on dip strategy again coming in with e-clerks as well. Thank you, Ashish, so much for joining us on the show and discussing the movers and shakers, because a load of stocks that are reacting to earnings in today's session. And I think even Monday's session is going to be as heavy, taking into consideration the kind of numbers that we are going to see in today's day. Thank you. Stay safe and speak to you soon again.
Thank you very much.